So backtracking, I don't have a P in my last name, so don't put that in. If I ignore you, it's because you put a P in my last name.
Sorry about that.
My name is Nicole Thomson. I am the DVD for BC for Merix Financial. Merix and Lendwise are both me. Does anybody know the difference between Merix and Lendwise? Just one person? 2 people? 3 people? Yes. Okay, perfect. Would anybody like to share the difference?
Who are you pointing at?
Somebody over there.
She's pointing
so we can make it awkward by having someone. We can just tell them who to guess.
Right beside me is Jane. She put her hand up, so I went, oh, that's Peter now. Okay, that way.
Right.
Yeah, and I don't know if that was actually, I should have put my hand up because I was signed up with Lendwise, but I've never used it. I kept coming to Merix over the past couple of years. So
perfect. So what do you think the changes of the differences?
I don't know.
Very simple. It's very simple. It's super simple.
Yeah. All right, Pete.
Okay.
Pete, go for it.
So commission, right?
Merix is, it's all about commission. Merix is a trailer fee model. You get paid year after year after year. Lendwise is upfront.
Exactly. So Merix, you get paid 87 bips up front, then you get 5 bips every year of the first term, works out to 107. And then you get paid 20 bips every single year for the life of the mortgage. So if they renew again and they renew again and they renew again, you get 100 bips, 100 bips, 100 bips for every term. So it's very good to be aware of Merix and see how it fits your business, because there's a lot of great files that I'm sure, some other lenders paying themselves for your files as they renew and renew and renew. So definitely think of Merix for those files. Lendwise is your upfront compensation. So it's very simple, very same as everybody else. So that's where you get your paid upfront. At renewal, we don't pay you anything at renewal. So those are those files that you're going to look at switch transferring or trying to explain to them why they shouldn't renew for that great rate that we're going to offer. So keep in mind the 2 differences. I love Lendwise for those clients that are short term. Maybe they're going to be selling in 3 years, or they like to actively pay down their mortgage, that type of thing. So there is reasons for both. Mindy, do you have a question?
Yeah, quick question. So if we have a Merix client who has a 5-year term mortgage, and then in say year 3, they decide to do an early renewal with the basically new rate, would we still get paid on that? Or
so if they're doing an early renewal, and we're just straight up renewing them, you're going to start getting 20 bips every year. So your trailers will change from 5 to 20 as soon as they renew. If your clients refinance with us, number 1, make sure you're sending those ones in. You get paid on the top up, and then your trailers continue.
Right. Okay. Thank you.
So those are the 2 differences. Your underwriter is the same, the policy is the same. Sometimes randomly we might have a promotion specific to one, but generally our promotions are both for Merix and Lendwise, such as our current promotion, which is for any high ratio or less than 65% loan to value insured or insurable ARM clients. You're getting an extra 30 bips right now through both Lendwise and Merix. Okay, so if you have any of those clients that are looking for ARMs, we're a great fit for that, because you get that extra 30 bips, great rate, and you can kind of choose what to do with that extra comp. All right, so diving into kind of products and that type of thing. Oh, beautiful. That's not, okay, so this is not the email I want you guys looking at though.
I thought I nailed it. It says there's a promo.
It is. Oh yeah, that's good. Sorry, I was on my next track. So yeah, so this is, actually I'll dive into this. So every Monday we send out our rates. If you're not getting our rates every Monday from our marketing department, send me an email. I'll make sure, I'll double check. Sometimes it goes to the wrong inbox or blah, blah, blah. So I will double check it, make sure it's great. But why you want to check that is because every Monday you're going to see what is available currently for our insurable promos. It's the only place realistically that you're going to find it. You can look on the portal, but I doubt you're going to go log into the portal, search for promos. Just take a quick peek every Monday so that you're not missing out and sending, say, to somewhere else and realizing that you just left 30 bips on the table, right? So let's get you those great promos. All right, Pete, do you have that? Actually, I'll just share the screen. So When it comes to Merix, our programs and policies, we have insured, insurable, and uninsured. Merix and Lendwise is A lending. NPX is B. I have nothing to do with that. So if you're interested in B lending, send me a message. I can forward you to our B rep, but I know nothing about it. So everything is going to be A, insured, insurable, and uninsured. And today we had some fantastic updates in regards to our insured, insurable, and uninsured. Say that 7 times fast. Can everybody see this thing? It says HTML proof here, marketing. Everybody see that? Perfect. Okay, so this is the email that's in your inboxes right now. In general, if not, you're going to email me. But it gives you some really exciting stuff. So Merix Financial is proud to finally tell you, yes, we have AVM. So on your uninsured files, if you're sending them in to us, which you are because our rates are great, our products are awesome, we're amazing, your underwriter is great, all that fun stuff, you now can get AVM. So it's $99 for your client to have that. Then you don't have to worry about an appraisal, anything like that. If it doesn't qualify for an appraisal, or sorry, for AVM, maybe you put the value too high. Maybe the value is actually 900,000 and you're like, oh, I want to get some extra out. I'm going to push it up and put it for $1 million. And so AVM comes back as not like that it didn't work. Then you're going to have to get a full appraisal. So definitely keep in mind when you're putting in the values, try to be as accurate as possible. But we now are including Solidify in our AMCs. Why that's great? Not that just AMCs are great, but because a lot of people I find tend to go to Solidify because most people use it and we weren't in the past, but now we are accepting it. So kind of a win for us. But even more of a win is point number 3. You can order your appraisals direct. Yay! So that is available on insured, insurable, and uninsured files. Make sure you check the approved appraiser list so that you don't order from somebody that I've never heard of or we don't use. But especially as you get into smaller areas, I find that that can be so handy because then you're not having to worry about somebody moving from a different location to try to get up there with the AMCs. You can order direct and you know who's great there. Okay, there is on this email appraisal requirements. So especially if you're ordering direct, make sure that those appraisal requirements are checked off. For example, like we use CRA appraisers or ACI appraisers or DAR appraisers. So that's their, whatever the licensing that we accept. So make sure it fits those and some other stuff there. Other things that we've added to, so uninsured. A lot of stuff is going uninsured. I find there's a huge uptick in BC on uninsured business. And so we've been enhancing what we've been doing. Prior to this email, we did 90-day rates. So we were stuck at 90 days, which was kind of sucky because a lot of my competitors could do 120, but now we can do 120. It is for live files only. So we don't do pre-approvals on our uninsured. We will look at it on our insured and insurable. Make sure to check the rate sheet that Pete showed earlier for those rates. But we do definitely offer uninsured 120-day rate holds now, which is great. As well, we've updated our rental program. So our rate on our rentals is only 10 bips extra, which before was 60 bips. So it's quite a bit different. And our program is good because you can do a partial gifted down payment as well. We do allow for on the subject, we're going to use 50% add back, and you can look at excluding the taxes and heat on a subject rental. That can be kind of fun. As well, you can use our net rental calculation, which if you've ever heard me talk, you know I love my net rental calculator and my net rental calculation for non-subject rentals. So you can use that if they have any other non-subject rental properties. So that is fully available. Does anybody know why I love my non-subject rental calculator? Can anybody remember what that fun little thing that we do with our shortfalls that most people don't?
You subtract or add to income?
Yes. I don't know who said that, but I love you. Yes.
It was me.
Oh, there. Thank you, Cornelia. I appreciate it. So yes, so we absolutely, the big difference is if you have a shortfall, you're not adding that as a liability. Okay. So you take that shortfall and you deduct it from income. If you've never done this on a file and you're like, well, it doesn't seem like that's great a deal. What's the big deal? When you have your first file after today that has a non-subject rental, connect with me and I will show you the magic. I'll show you why it's so great. Number one reason, or number one thing, like easy enough, is you're taking that property and you're washing it from the application. And so it's not having a liability in the application anymore. You're not putting the mortgage payment as a liability. You're not putting the heat as a liability. You're taking up that as a liability, and it's now changing the income slightly. So it can be, I've seen it where, you know, we've had 46 TDS trying to get a ratio exception that somebody read who will do ratio exceptions, because we don't, but they said no, and then the broker comes to me, does my rental calculator, and we're at 42 TDS, like no ratio exception required, just easy peasy lemon squeezy. Okay, so other things, we have enhanced our switch transfer program, so we now do switch transfers on owner occupieds and rentals. I haven't well versed myself in this new product, so I can't tell you too much about it, but what you need to know is that if you have a switch transfer on your plate and you never want to have to switch transfer that client again, let's switch transfer them into Merix and get you paid for the rest of that mortgage. But we have a good program, and you can do it on insured, insurable, and uninsured. Okay, so check me out. And on my insured, insurable, and collateral, it's a no fee transfer. I don't know about my uninsured yet. I'm learning about it, and I'll tell you more. So watch your emails in the coming weeks. But we do a no fee transfer, best rate, awesomeness, and happy clients. Okay. Agricultural land reserve. So this one's actually pretty huge. We are looking at the ALR now. So if you do have a file where the client's looking and they're looking at an acreage, and right, we can look at it. So number one is we don't want any income. They can't be deriving income. Essentially, these are professionals or people buying a property to be their owner occupied. They're not planning on farming and becoming farmers in their side life. They just like the look of the property. We can do that, and ALR is fine. Okay, so definitely think of us for those ones, and just make sure no income derived. As soon as like there's income being derived, we're just going to be out.
Did you say ALR is okay?
Yeah, definitely half listening to my fun.
No, I'm listening to it all.
Yes, agricultural land reserve, ALR, yes.
Okay. Okay.
The other thing, one thing we've changed with, which kind of leads into the ALR, is we're no longer lending on hobby farms. Okay, so don't think of us for hobby farms, and don't think of us for properties over 50 acres. Our max is now 50 acres. Okay. What we are doing though is, and I think, oh, maybe it's in the bottom one, is we are 15 acres plus the house for the appraised value. Okay, so that can give you a little bit more, because we used to be like 5 acres or 10 acres, but now we'll use 15 acres plus the house for the appraised value. Okay, so that can get you a little bit more. Other things is, so on our uninsured, we're now doing 39.44. Probably doesn't seem super exciting because you're like, everybody does 39.44. No, we had some weird things where we'd be like, oh, well, if you want this rate, it's going to be, you have to cap at 35.42 or da da da. No. So one thing we've done in the past couple months is we've simplified one rate, one policy. You're not going to get, oh, well, I can do it, but now you're going to have a premium of this. No, it's very simple. So it's wonderful, wonderful, wonderful. So 39.44 for ratios for uninsured. We can go to 80% loan to value on uninsured, not a problem. So definitely something, and that includes rentals as well. So uninsured rentals to 80. Our max mortgage amount on a rental is 500,000. I can look at higher though. So anything over 500,000 for mortgage amount, reach out to me. Okay. We've also added business for self add backs. So I've had actually quite a few of these questions in the past couple of weeks. I've had to say no to on my uninsured side, but we do that. So basically what that means, if you have an insured deal, an insurable deal, or an uninsured deal, you can gross up by 15% on a sole proprietor, or you can do the add backs of business use of home, capital costs, or motor vehicle expenses. So whichever one is best. Okay, so pick and choose. Tax grants. So we've always been able to reduce the do the net property taxes on the insured and insurable. Now we can do it on the uninsured. So that's a nice little perk and pick me up. It just makes sense. Okay, so we've also adjusted some of our standard heating costs. So minimum is $100, but on a house we can do 60 cents square foot. We have expanded lending areas. So if you're looking for a lender that can lend in smaller areas, we tend to be pretty good about that. So definitely check in with me if you're, and we don't premium the rate. So you're not, or make you pay the insurance premium, that type of thing. So definitely check us out. I do have, if you are, so I know in the Okanagan, there's more micro or smaller condos being built right now. Our minimum condo, as long as it's close to an urban center, is 300 square feet. Otherwise, it's 500 square feet and 750 for a house.
What is considered close to an urban center? Is Vernon urban?
You know, it's funny, as I was saying it, I'm like, you should have checked where Vernon landed on it. I'll let you guys know about that one. I'll double check and confirm.
Hey, Mindy, how small are the Vita?
306.
I thought they were
307.
313. Yeah.
Actually, Kelly, could you send me an MLS or like one of the like layouts for that, since you're sending me an email anyways, and then that way I'll get that exact building, because obviously a couple of you have properties in that building.
Vernon's very urban. We have 2 Starbucks.
Yes. And you
Three. Don't we have 3?
Maybe.
You also have like a brown.
Isn't there one over by Safeway?
We have a cat, guys. That's pretty urban.
Exactly. I ate at Cactus Club while I was there last, so I know you guys are coming. So I'll see, because it also will be like, if Vernon's not considered, I'll see how close it is to Kelowna for that. The big thing though is that we're not going to lend on resorts. So chances are, especially on a rental, no rental pools, no resorts, nothing like that. I might be able to, if it's an owner occupied, so you have a client buying in a resort, but it's their owner occupied, that I might be able to make an exception on. Age restricted, since I'm kind of diving into condos right now, if you have somebody buying an owner occupied and it's age restricted, I can look at those. So don't hesitate to reach out on those ones. Okay, anything kind of off the beaten path that, you know, not everybody's landing on, reach out to me, because chances are I might be able to. Actually, I do have a lot of really good things I can do. I won't advertise them all the time, but for you guys, I'll say yes if you call me, because I'm lonely.
So nowadays everyone's calling it resort residences. Like, maybe it's just a word, it's not really a resort. It's you know, and it's Okanagan. You guys are the ones that have these. It's not, I haven't seen them anywhere else. The big thing is that we don't want to lend in there for a rental, right? That's not our lending appetite. But if somebody's a lot of people tend to be moving into those, and they like, I'd like a pool and all that. Like, that'd be lovely, especially if it's age restricted. I don't have to take my kids there. That'd be amazing. So other things that we've done is we've increased our loan to value. So the rest of BC used to be $1 million. Now it's 1.25 for single family dwellings and townhouse. So we do 80% of 1.25, 60% of the balance. Okay. Always, like, if you have one that really makes sense and you want to kind of push the envelope, I like pushing the envelope, so don't hesitate to ask me. Some of the other things that we've changed kind of behind the scenes is we're really empowering our underwriters to make decisions and kind of mitigate the risk and say why they think the file works. So for example, our minimum beacon on our uninsured side is 650 for both applicants. Okay. But the underwriter, if they really like go, yes, you know, this makes sense because of blah, 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 they can maybe look at a 640, right? So that's up to their discretion on it. So if something doesn't fit the mold, but it really makes sense because let's give us a try, or give me a call and let's discuss it. Going back to like the traditional 5 C's of credit, that's where you're gonna, so if four C's are amazing and one is a little off, but it really makes sense because these 4 are fantastic, that's going to be like, yes, you know, it makes sense. All these mitigate this because of this. That's the style of underwriting we've really gotten back to. So it's not as boxy, which is good. In addition, my mind went blank there. 5 C's of credit, I can't remember. But yeah, so it's really a good time to be kind of checking us out, trying us again. I know what I was gonna say, documents. Documentation, we're lightening the documentation requirements. So this is in comparison to us, not in comparison to everybody else. But if you've ever had a document been like, why is Merix asking me for that? We've mitigated our documentation, which is fantastic. One that was, you know, a make sense, easy win was pension income. If you have a public pension, We used to have you get us 2 documents. We only need 1 anymore. So if you have a T4A, that's great. If you have deposits, that's great, like 1 document. So simplifying it. And if we can't, let's say you have, job letter, pay stubs normal on a file, right? Job letter, pay stub, we do a verbal. But let's say, we don't necessarily need to do a verbal, right? And we have a job letter, pay stub, they've worked there forever, it makes sense. We are not gonna, the underwriter can make the decision, yeah, we don't need a verbal on this one. So especially on those files where verbals are challenging, especially on those ones where verbals are challenging, or like the health industry, like nobody wants to answer a phone call to verify a letter, those types of things. So we have some ability to kind of move and shake a little bit better than we have in the past, and they'll be good. And one thing that I haven't mentioned, but I know you guys are all aware of, we are looking at past bankruptcies now, so that's a new one for us. So that's something that is available. If you have a client with past bankruptcy, reach out, let's discuss. It needs to make sense. Same thing, 5 Cs of credit. If your client had past bankruptcy, still doesn't pay their bills, or really has only had a job for 3 months, like, does it make sense? Yes or no? Let's work with that.
Is there a minimum number of years post bankruptcy?
2 years. Other things are insurer programs. So I kind of dived in, or really focused on I forgot that I'm still sharing my screen. I'm gonna stop sharing so you guys can see my face, because I've been staring at you guys because I've got my 3 screens. So other things are programs. I've talked about our uninsured. Number 1, it's fantastic. So if you're sending an uninsured deal in the next 2 weeks, send it to me, obviously. But our insured program, we offer new to Canada, purchase plus improvements, flex down, vacation, second home program. We have a bit of like everything. So if you're looking for a lender who has those insured and insurable programs that the insurers are like, this is so amazing, you need to be using this, Merix has those programs. Okay. We use the first time home buyer incentive program. It's one that doesn't get used a ton, but when you're looking for a lender who does that, Merix can really be that one-stop shop. So we have a lot of really good niches. You can send a lot of your files. You don't have to go look off for those one-off deals, because most likely we have a program to do it. Okay. Any questions? I think I'm done my spiel. Yes.
I do.
Jane put her hand up first.
Curious, that's my favorite. I'm always up in my area, and for the rest of you, I'm up in the north. I'm in Prince George. Mm-hmm. So I do get the odd mobile on its own land. That's good. Are you still offering that program?
It's a good question. My understanding is our mobile home program is kind of being phased out. Okay. So if you have, I'm trying to pull it up at the same time, but if you have a file that is a mobile home, or actually no, mobile homes we're done with. We aren't landing on modular homes. I can maybe look at, so reach out on those ones, but we did we started moving away from that, unfortunately.
So your portal, do we all have the same access code, or do we have separate access codes?
So that is actually up to you as a team, how you want to do it. So as of now, you have Deb's login. That is the login for it. That login will take you into the Merix portal, and then you can toggle to Lendwise in the top corner by clicking the Lendwise logo. If you decide, I want my own login because I'm going in here and all of a sudden I'm getting booted out, only one person can be in at a time. So the main login has access to add people. So, and you add yourself as a Merix person, or you add yourself as a Lendwise person. So as a team, you can decide how you want to do that, but it's through Deb's login. And if you have individuals, you need one for Merix, one for Lendwise. So decide which one you're supporting, or do both.
Because I was just trying to get in there. Kelly, were you just trying to get in there too? Okay, so for instance, Kelly, are you still in there?
No, I'm not. I got
okay. So I'm looking on our deal, wondering what's going on, and it says waiting on broker.
Yes. So if you
it's not.
It's not. So
no.
So Margarita. What Margarita?
Yes, please. I'd like a strawberry.
Right. I like strawberry too. Extra.
No, nobody else thought that. Come on. Okay.
Her favorite liquor is tequila. I did have to ask her.
But she's Russian, so I thought it'd be vodka, but it's tequila. Anyway, so when you're in there, if you see it says awaiting broker, click the conversations tab.
I did, and there's nothing in there.
There is. Remember, she sent you that email where she said
That's
that she's going to
though.
work on it this afternoon. So that's her way of communicating and letting you know what's going to happen. So you're going to, if Margarita says she's going to do something, she's going to do something. So she'll get you something today.
Okay, so I can't even send a message to her through the portal. It says, nope, it says error. It says error.
Oh, if you're getting the error and those blocks, that's because you're getting logged out of the system. Okay. But
it says something went wrong processing this request. Please try again. So
that's not a normal system. We don't normally have that in the system. So I would say, let's get you your own login so that you don't bounce each other out. But you can also send Margarita an email. And you can also say to Nicole, hey, Nicole, can you just check on something? And I can send Margarita a quick note, which I'm doing right now. And we're recording this. There. So yeah,
when we go into other portals and it says like waiting broker or whatever, it means that we're supposed to do something.
Totally. Margarita's the only one that does it that way. And I don't love that she does it that way, but it also tells brokers that you can, if you look in the conversation tab, you'll know exactly what's going on. So in this case, you know that she's going to get you an update that she's going to review it today.
Yeah, not really, because if I go in there and it says awaiting broker, well, then I'm thinking, well, what the hell did I miss? Most of the time that will be what it is. Yeah. So, I mean, it's like hit and miss, and then I try to log in and it keeps bouncing me out. So far, not great.
Let's get you guys with Pete, let's you and I connect so that we can get some individual logins.
Sounds good.
Has a login been sent around for us yet, or?
No, because apparently it keeps logging us out.
No, that's just Kelly. Questions on the chat. Is there add backs for incorporated? Can we add back non-cash expenses?
Say again.
So on the Business for Self program, you had add backs for non-cash expenses like CCA, business use of home, etc. Is that applied to someone that has an incorporated company?
No, it's just for sole proprietors. Yeah. And if anything changes, I'll let you know. But yeah, at this time it's for sole proprietors. Good question.
What about if they draw an income from the corporation? Is that grossed up?
We do not gross up. So if they're using T forward income or dividend income, we're going to use that amount. But we do accept dividend income as long as you have. And actually, one interesting thing that I think most people should do, but sometimes I get people surprised on it, is if you have a client that's like T forward, then they do dividends, and then they do this. If we can establish a tier average based on the documentation, we can use that. So even if they flip their income back and forth, that's not a problem. As well with that, if you have, like I had one yesterday where they were a sole proprietor in 2020 and they were incorporated in 2021, we can use the tier average on that. Okay, that there's enough information for us to establish how their income is, how their income was, how their income is going to be. Okay, if they're 1 or 2 months incorporated and you're needing to use that incorporated income, that might be a challenge. But if you can use a sole proprietor and just confirm that their income's very similar, we're good. Same with employees versus contractor business for self. Does it make sense? Can we show some stabilities?
I'm just seeing if I can upload documents in here, and I can.
Yes, you can. And your file is next on Margarita's list, Deb. She's just working with an end of the month funding.
Can we just keep saying Margarita?
Margarita.
I'll have a mango, please.
Ooh, mango.
There we go.
I had a guava mimosa the other day. It was
that would be nice. So Nicole, are you guys doing refi plus improvements by any chance?
We are not.
How is that for like sounding solid? No, we are not doing refi plus improvements. I have been told we might look at uninsured purchase plus improvements. I haven't seen the programs, so if you have an uninsured purchase plus, I might be able to check with me, but definitely not a refi plus improvements. We want to stick to that 80% loan to value cap as is. Okay. Any other questions?
Yeah, did you find out, because you have the flex down, right?
Yeah.
So with the flex down, did you happen to find out if that can be in conjunction with the government program?
I did. So I asked about that. So the technical answer is yes, but the the more, Canadian mortgage answer is that yes, it can, but does it make sense to? And will the insurers want to approve it? Was what came up. So it will really depend on the overall strength of the full file and the client and everything. But if it's a scraping client and scraping file, the insurers won't want to do it under the flex down, but technically the two programs can go together.
Okay.
Technically.
Okay.
So the newer brokers know what that means. Any questions on, so flex down means that you're borrowing the funds from like a line of credit?
If you're like going actively after realtors, flex down's a great program to tell them about because they never ask their clients if they have enough down payment to actually buy that house. And if you're a newer broker, and some of the stuff that I've said has been like, I am a really good person to call and ask stupid questions to. Okay. So don't hesitate, be like, oh my gosh, I should know how a purchase plus works. I feel like an idiot that I don't know how my client gets their money for the purchase plus. Who do I call? I don't want to bug Deb. I don't want to bug Pete. What do I do? Call Nicole. Okay. Number one.
Nicole, you always answer the phone and I so appreciate you for that. Thank you.
You're welcome. So yeah, I do pick up my phone. I think I hear it's an anomaly in the industry, but if I don't pick up the phone, chances are I'm going to call you right back because I'm on a meeting or in a meeting or on the other line. So you can send me a text or send me a quick email. Don't take the time to write a 20-minute email because you'll be halfway through and I'll call you back. So you can send me an email saying, hey, just wanted to call and discuss an owner occupied, or just had some questions on purchase plus, or send me a text. Okay. Don't ever just text me though. Okay. So rule of thumb, don't just text me because I don't have an out of office. So you won't know that I'm away, and I'm going to be off the grid in the summer at times. So I won't be able to see your message until I get back. Okay. So email, call, text. If you're texting, call or email as well, so that you'll get my out of office.
Nicole, can you give us a really quick snapshot? I know you did it a little bit earlier about rentals. So a subject property rental.
Yes.
Sorry, I think this is from Judy. Subject property rental suite. So I'm assuming owner occupied with a rental suite. How do you treat that?
Great question. So if you have the subject is an owner occupied with a rental suite, we're going to use 50% add back and exclude the taxes and heat if it's an insured or insurable file. Okay. We can look at using up to 100% add back. So if it makes sense, file strong, we can look at 100% add back. Okay. Yeah, that's simple enough. If it's uninsured, owner occupied with a suite, we're going to use a 50% add back.
Include the taxes and heat?
Include the taxes and heat. Oh. Yeah, so we're not excluding. Only on insured and insurable will we exclude the taxes and heat on a subject suite.
So when I just uploaded the documents, I did get an email that confirmed that they were received, and it outlined Perfect. Exactly what I sent. So if I send them and don't itemize what I sent, I can send it to Kelly so she knows what I sent.
Yeah. But go click on you're in the portal right now. Click on okay. You can also see what you uploaded on our portal. So you know how some like disappears, like you can't click it. You can actually, so if I say, hey, Deb, you just took a picture and put a picture of Sue on there instead of the down payment, and she'd be like, no, I didn't. And then she can click on it and be like, oh, I literally did. So you can look at that. So if your underwriter is saying, hey, you didn't send me the NOA, and you're like, I did, I know I did, it's number blah blah blah. CC me on that, say, hey Nicole, they can't find this, it's number la 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 on the number 12 on the documents, and I can go in there and see that, you can go in there and see that, and I can help direct the underwriter. Chances are they're not going to do that, but it gives you a little bit more control if you're feeling like you did something.
Well, ironically, a client insisted that they sent me their pay stub, and I clicked on it and it was a picture of their child. So that's kind of funny that you said that.
Yeah. Any other questions with the rental income?
Is there a convenient sheet that you have that describes the various scenarios? I'd love to have that.
That one should come out this week. I haven't seen it yet.
Okay.
But I have my little cheat sheet on it. It's not simple, like, because it's not as simple as it once was. It's not 80% offset, that type of thing. But funny fact, 80% offset isn't necessarily as good as my net rental calculator, because my net rental calculator can work out to be 100% offset. So don't be lazy, take the time, fill out the worksheet.
We're in the Okanagan. This is about lazy.
Yeah, I know.
And is the worksheet on every single file?
If you have a non-subject rental, yes.
Because I get confused, because sometimes we'll fill out the rental worksheet, but it's only for one non-subject property, and they say, no, we don't need it for the non-subject property.
Great question.
So is it for, if you have 1, 2, 4?
Yes. As long as you have lease agreements for the properties, lease agreements, or if they're existing, they've been claimed on the T1s. Okay, so if you have one property, one non-subject, you have a lease agreement, maybe they're existing owner occupied, but they're flipping and changing into a rental. Okay, get a lease agreement on it, and then you can use that one worksheet, and it's one and done. Okay.
Question, Nicole. Then I wish I'd have checked out Merix for this file, but I have clients that have too many rentals and too many owner occupied. And I had to work the file 3 different ways with father and 2 sons. But one of the properties, the subject property is a 4-plex. One of the suites is being rented. In that case, would you guys allow the rental on the 4th suite?
No. So anytime
market rents?
No, subject property is not going to be the net rental calculator. Okay, subject property is going to be that 50% add
50
back.
to 100 if it's strong.
Yeah, exactly.
Okay. And how many rentals are you guys doing up to?
5 properties total.
Including the owner occupied?
Yeah.
Properties or doors?
Properties.
So if one property has one PID number, but it has 4 doors, that's still one property?
Yes. Yeah.
Okay.
So what you're going to get, so if you have a person that has like a great portfolio, they have 3, 4-plexes, they're buying another 4-plex, that type of thing. Now you're looking at 20 doors. 16 actually was the actual, for anybody who's doing that. So 16 doors that we can do because it is work, but we may not want to. It might not make sense for us to look at 16 lease agreements and use that much rental income on a file. So if you have a file where there's a lot of doors and you're like, well, it fits Nicole's policy of 5, give me a call. Let's dive into it, see how strong it is and how much net worth there is. And if it's, if it's the middle of like the busiest season and my underwriter, you need a quick turnaround, I'm going to probably say it's not going to work. But if it's in November and it's a bit quieter and the file is strong, I'll say, yeah, let's do it. Okay. And big thing with lending is that it might fit the policy, but you might still get a decline. Okay. That's not just a Merix thing, that's an everywhere thing. And that's because even though it fits the policy, if it's not strong, if there's no strength, if the client's scraping by on every portion of the policy, that might not be the best situation for the client to be going into. And as a lender, we might not support it. Okay. So if you ever get declines like that, and you're frustrated about it, and you don't understand like why it's, they said 620 beacon, or they said a minimum 600 beacon, this is a 600 beacon. They said the person just had to be on the job for 3 months. They said they would do, gifted down payment, but why won't they do this file? Reach out to me, we can discuss it. Like I'm happy to kind of go through and give you kind of from a lender salesperson perspective on, you know, what the underwriter is seeing as well. Generally, my underwriters are going to give you 2 or 3 reasons for a decline, so it's not going to be usually just a straight up, nope, we don't like it. Usually they'll tell you why, and then that'll give you the ability to strengthen it as well. Maybe it's a co-applicant, maybe we want to see some savings, maybe the insurer said they didn't like that, right? So yeah. Any other questions?
One last question on the chat. If you've got, converting a current home to a rental, and obviously there's no existing lease in place, can you use the market rents? And if so, can you use that rental calculator?
No, so if you have market rents, you're going to be using the 50% add back and excluding the taxes and heat. Okay, on that non-subject. If you have a lease agreement, okay, then you can use a rental worksheet. So it's one of those things that's not a bad idea to get a lease agreement, especially like, and the other thing, and I had this conversation about a month ago with a broker, if your clients are planning on leasing it before they actually move into the new property, you know, you don't need it for subject removal, okay? Like that's something you can condition for. Just make sure that your numbers aren't super tight, right? If you're, you know, if you have to have $2,000, but realistically the market's only going to give you $1,700, that's where you don't want to remove conditions prior to having a doc. But yeah, if it's, you know, if you're not extending it and that type of stuff. If it's an existing rental, we want them claiming on their T1 generals. Okay, so make sure that your clients are claiming their rental income. Most should be because of this, just the different tax rules that are going on and stuff, but there's occasionals that we get. I like all the smiling going on.
Right. That was it was really informative, and I'm pretty excited to have another great lender back on. So thank you for joining us. I actually don't get the other emails. I only get the rate updates, so I'm going to email you and try and get the additional emails as well.
You must have gotten the one from today. If you get the rate updates, you didn't get the one from today?
Nope. No, it's so weird.
Yeah,
Sue showed me the email and I was like, no, I didn't get that.
Weird. Okay, yeah, forward me a message and I'll check onto that, because that is the same email as the rate. The ones that you maybe wouldn't be getting is the ones from my MailChimp, which is like Nicole does personal emails where she tells you about a product. So in the past few weeks, I've been telling you about Flex Down and New to Canada and all that stuff. So
gotcha. Yeah. Cool. Does anyone else have any questions? No. Awesome.
If you have a file you want to discuss, give me a call, send me an email. I am looking forward to working with you guys again. And thank you.